We're live. Hello, everybody, and welcome to another episode of This Week in Real Estate, hosted by yours truly. I'm Ray, a bearded man of real estate, and this is the one place, the one stop where you can go to find out everything that's happening in the real estate world, especially with all the drama. We have a far less drama-fueled day today. It seems like the summer drama is cooling off just a little bit. Maybe just in time for us to have a sane conversation about the real estate market itself. So that's what we're going to be talking about mostly today. This is episode 300. Is that right? It's episode 328. Broadcast live Wednesday, August 6th, 2025. And the title today, the title and the thumbnail. Summer housing freeze? What? Here's the thumbnail for you. I love it. It's a very cold summer market. We're going to be talking about that today. And if you're a real estate agent, I want you to chime into the comments and let me know where you're watching from. Olivier, he's already here on YouTube. He says, howdy. Someone needs to wake up Matt. Yeah, everybody ping Matt LaMarche. If you got his phone number, just text him and say, it seems like you're missing something, Matt. If you're watching over on YouTube, you can comment. We can talk about you, or we can just talk about your comment. We're also broadcasting live on LinkedIn, Instagram, Kick, Twitch, and Facebook. So any of those, you could comment. It looks like we're actually missing one of the Facebook broadcast. That's weird. Let's see if I can do this and push it out. We'll see. We'll see if that updates it. But thanks everybody for tuning in today. And without further ado, let's just get right into this news because we have just a little bit of real estate drama to cover. And then it's almost all the economy. So the market's doing weird things and we're going to talk about it. But first up, there's another lawsuit. This time, it's not a gigantic class action lawsuit. It's a little more technical, but it's still a lawsuit. So homebuyers are suing a brokerage they allege steered them to a lender. RESPA violation. There's a key reason why I want to bring this up. So hang with me here. We've all heard of these types of stories. A North Carolina real estate brokerage is accused, so all this is allegedly, of requiring its agents to send their clients to a mortgage lender that was picking up half of its monthly digital marketing expenses. A co-marketing agreement. We've all heard this co-marketing agreement talk before between Raleigh Realty and Cross Country Mortgage also circumvented the lender's internal company policy. It was simply window dressing created for a plausible deniability. I know co-marketing agreements that have to do with lenders renting an office from a real estate agent or agency or brokerage, but there's no actual office that they are there. There's nobody there. It's a room. It's an empty room, and they're paying super high prices for this quote unquote rental inside the brokerage. And this has kind of got to be in the same vein. This co-marketing agreement is often what people were using for Zillow, where a lender would pay for your Zillow. And this was backed by Zillow. I don't know if they're still doing this or not. Chime in if you currently use this on Zillow. But a lender could pay for the real estate agent's marketing. Now I think they do it, but the lender also gets marketed on the property or something like that. So co-marketing agreement between Raleigh Realty and Cross Country Mortgage. The lender said that that this went around their internal policies. So this was from 2022. The new lawsuit brought on behalf of the home buyers from one of the law firms. Home buyers by one of the law firms involved the 2022 case. Magnus Howard build on details uncovered during the discovery process of the previous case. So it was a 2022 class action lawsuit already. The allegations center around the 2021 co-marketing agreement in which Raleigh Realty was ostensibly to provide web marketing services for Cross Country Mortgage to be reimbursed $15,000 a month. but the lawsuits claim Raleigh Realty was actually expected to send home buyers exclusively to Cross Country Mortgage. Now, how would they prove this? Well, how about a group chat with Raleigh Realty? Guys, this is, I guess, this is from someone in the chat. It says Ryan Fitzgerald. He's the owner. It says, every time you guys recommend your friend lenders, it is taking money out of the company's pocket. Everything goes to Corey Walker, please. I cannot stress this enough that if I see you recommending your friend lenders instead of Corey, I could not keep sending you leads, because at that point, you're taking money out of the entire company's pocket. That is not a good look. According to the lawsuits, Fitzgerald had started discussions with Walker and his supervisor, cross-country executive Chuck Shackelford, about the terms and expectations for the agreement between companies February 2021. Shackelford, as he did in other circumstances, expedited and circumvented the process by which the co-marketing vendors were generally approved by Cross Country's marketing department. For this particular deal, Mr. Shackelford took his proposal straight to the top of Cross Country executives. Cross Country marketing managers who customarily review marketing agreements warned that the company's executives that had expedited the procedure circumvented the company's policy and violated RESPA. Well, this is from way back in 2021. Wow. So apparently Raleigh Realty had a $30,000 budget for services from Page One Power LLC, a digital marketing company specializing in search engine optimization. So Raleigh Realty was paying $15,000. Cross Country Mortgage was paying $15,000. And the deal was they had to send all of their clients to Cross Country Mortgage. Ultimately terminated its agreement. The Cross Country terminated its agreement when it wasn't getting enough deals. It wanted 15 deals a month. And if it wasn't getting 15 deals a month, it terminated the agreement. One couple that sued the broker. So this is one of the questions I had. Well, I have two questions. First is, how different is this scenario from when Rocket Mortgage lender tells their clients, use one of our Rocket Mortgage real estate agents and we can get you this special discount on your loan? Is that not similar to this scenario? I feel like it is, but I'm not a legal beagle. I don't know for sure, but I feel like that is a very similar circumstance, just done the other way, from the lender to the real estate agent instead of from the real estate agent to the lender. Because I've had people call me and said, well, right now I'm approved with Rocket and I get a big discount on closing cost or down payment, whatever it was. I can't remember. I think it was discount on closing cost, but I have to use their agent. Now, the reason why is because Rocket Mortgage is going to refer that agent. The referral money goes back to the lender, and then the lender rebates a portion, small portion of that referral fee back to the consumer. All right. So here are the damages. That was my second question. How do you calculate damages on something like this? One couple that sued the brokerage and his partner lender said they were required to pay $995 loan origination fee and a $3,765 discount point fee on their cross-country mortgage. Despite paying the discount point, they still ended up with a rate that was 0.75 percentage points higher than they could have qualified for with another lender, they alleged. How do you prove what you could have qualified for 3 years ago? I don't know. Maybe like right when it happened, they talked to another lender and the other lender was like, yeah, we could have gotten you this. But you know, there's a lot of lenders that say that, and then you get down to close and they can't even close you on that rate. So how do you calculate the actual cost? I don't doubt that this is a RESPA violation, but I have a hard time calculating the damages. You have to assume a bunch. The higher rate added $190 to the monthly mortgage payment, or $68,500 over the life of their loan. That's significant. Let's see, given the high level of trust that plaintiffs and other consumers place with real estate agents when buying a home, Raleigh Realty compelled plaintiffs to use cross-country mortgage despite the disadvantaged interest rate. There's another one. Okay, the most recent suit was filed July 30th on behalf of a homebuyer who claims they will pay $1,800 in extra interest over 5 years. Is that $1,800 per year over 5 years, or is that $1,800 total over 5 years on an adjustable rate mortgage? Interesting. So we'll keep an eye on it. I do want to know how they calculate damages. It's pretty simple. If you can prove that you would have gotten a lower rate, well, here's the higher rate, and here's how much it cost us now over the life of their loan. But they also may not be there over the life of their loan. So how do you account for that as well? I don't know. So agents, be careful if you're still doing this. It's such an old school tactic, but if you're still doing this, stop doing this. You shouldn't do this. All right, let's look at. We haven't really done earnings reports in a long time, and I'm kind of going to save them for once a year. I think at the end of the year, unless there's something really interesting that happens. The most interesting part of this earnings report was what the Douglas Elliman CEO said: we don't push, incentivize, or default to private listings. We don't push, incentivize, or default to private listings. We're encouraged by our strong momentum. Let's see. We've experienced a challenging period in May to early June. Where is the phrase here? Hang on. Okay. During the investors call, Leibowitz also addressed Douglas Elliman's position on the private listings debate, and that continues to be an active industry conversation, asserting that the firm has a commitment to transparency while also offering clients greater choice and flexibility. The decision to list a property privately must originate from the seller. Our brokerage does not push, incentivize, or default to private listings, Leibowitz said. Our approach differs from brokerage-led exclusivity models in that we offer private listings as one option among many, empowering clients to make informed decisions based on unique needs rather than applying a one-size-fits-all model. Additionally, we believe that co-broking remains the most efficient path for most sellers, as broad exposure is the most reliable way to maximize value and drive competition and full fiduciary obligation to act in our client's best interest. Douglas Elliman teased a private listings platform earlier this year in the spring. Leibowitz said that any platform that rolls out will require sellers to sign a disclosure form acknowledging the potential risk of reduced exposure. It's an interesting take. You know that by going on our private platform, it's reduced exposure. That's what they're having to sign. Okay. It's like they're putting a tool out there that they don't strongly believe in, but they want to have the tool because other people have the tool. But I would be hard pressed to use it if I was one of their clients, if they don't even believe in it. And back on the issue of, hey, what's up, Christina Smallhorn? Yo. Back on the issue of Compass pushing the private listings platform, which is kind of like tongue in cheek what they're saying. Like, we don't do, our approach differs from brokerage-led exclusivity models, which I have to say, this has been the kindest take on Compass's version so far. If you believe in the product, shouldn't you push it? If you believe that private listings is going to be best for you, if you believe that the private listings is going to be best for your client, then shouldn't you push that as a good option? Because the way Compass is using it, it's hard for them to point to a specific client that it wouldn't be good for. Because they're using it to test price, because they're using it, to roll out for their whole brokerage so their whole brokerage can see these deals. And then people that are on their list, I guess. Because how they're rolling it out, they believe that it's the best way to roll everything out. And if that's what you believe, then shouldn't you push that as, hey, you guys should use this? We have this really incredible tool and it serves everyone well. This is our take on it. We think it's the best for the consumer. We want all of our agents to use it. Isn't that what you would do as a broker? Now, I understand if you don't believe in it, like Douglas Elliman, that you wouldn't push it. But if you believe in it hard, what is the harm in pushing it? I don't think there's a legal reason why you shouldn't push something that you believe in to work. For instance, and I like to reduce things to the ridiculous just to make it easier to comprehend. That's how I think of things. I have to make them ridiculous and then I can think about it. Let's say photos. You have a seller that's like, I don't want any photos of my property. You as a real estate agent and your broker is going to say, hey, photos are the best way for sure. You don't want to list your property without photos. You want to have photos of the property. Photos of the property are going to really help. You really need some photos. And you're going to push your clients to let you take these photos and get these photos online. Because that is a practice that you as a broker and you as an agent think works best for the consumer. So if you had a practice like private listing network that you believed was best for your client, then why wouldn't you also push that? Because not having photos could mean reduced exposure. So you're pushing to get photos. Well, if you believe that the private listing network is the best thing for your clients to test the market price so that they're not out there at this insanely high price and they wind up selling for way below what they could have, whatever the reason, if you believe that's best for your client, then shouldn't you push it? So a lot of people had a problem with the broker's email, and maybe it was worded a little too strong, but in practice, if you have something that you really believe works well, then you should push your agents to use it. Now, if you're pushing your agents to use it as a brokerage exclusive to get everyone in your brokerage first dibs, I don't like that, but that is allowed by clear cooperation in the National Association of Realtors. So that's a different issue that everyone has to take up with the National Association of Realtors. All right. Any comments on that before we go to Opendoor news?
So why is NAR able to dictate the rules in our game? Number one, and number two is Compass has an agent in Alyssa Essig, who's a pretty big agent with them by the looks of it, and a speaker and a Tom Ferry coach and everything else, who did a YouTube on LinkedIn saying how much she disagrees with Compass's approach to this all. So sort of ties into the theme of the story that you're telling now. And I sent that to you over LinkedIn, by the way.
That's good. I should have her on sometime because I want to talk to her about it. Brian Hershey is over on Instagram. What's up, Brian? He said episode 328 is the one where you give me the $20 gift card to Starbucks, right? No, sir. We will have a giveaway. We'll have a giveaway. Yeah, like episode 400. Mia Zoll's over there on Instagram. What's up? What's up? Yeah, that's it. I mean, I think there are going to be agents that disagree even at the company. And I think that's fine for Compass to say, if you disagree, you don't have to do it. But we as a company believe it's the right thing and we're going to push it. Right? Just, like our marketing packet. We have an incredible marketing packet. We want you to upload all your photos and stuff to the marketing packet. We want you to go get it printed. And you as an agent may look at that and say, I don't really want to use, I like my marketing better. Well, you're an independent contractor. You're able to do that if your broker allows. So your broker can push their own product and say, we like ours better than yours because we're professionals and we've been doing this forever. And your hot pink pixelated 24-bit logo is terrible. But ultimately, if your broker lets you do it, they let you do it. So I think you can have that disagreement, but I don't think the brokerage should stop pushing what they believe works. If they believe in it, they should push it. That's my take. And if you don't believe in it, then why have it as an option?
And if you're an agent, go to work for another broker.
Christine M. Smallhorn said, "What's wrong with hot pink?" You know I love hot pink. There's nothing wrong with hot pink. But I did say 24-bit pixelated logo. You gotta update it a little bit. Jack, yeah, you're exactly right. You could work somewhere else. Maybe I should talk to
Make
Alyssa.
it lukewarm pink.
Say that again. You're breaking up a little bit. What?
Make it lukewarm pink if it's pixelated.
Yeah. Yeah. It would be hard to get a full pink in what's it, like 32-bit color or 24-bit color? Yeah. True. Brian Hershey said episode 350, a $50 gift card to Sonic. That's my final offer. Are you offering that to me? Yeah, we can do that. I'll see you at 350, sir. Oops, I hit the wrong button and made Brian Hershey's comment gigantic on my screen. Hang on. All right, there we are. We're back. Yeah, I just think if you have a strategy at your brokerage that you're offering and you believe it to be the best strategy, then I think you should push it. And if you don't believe it to be the best strategy, you shouldn't push it and maybe reconsider even offering it. Because if it's not the best strategy, then what's it there for? And I guess you could have a couple of people that it might be right for, but then I would even not market it. I would just take it off of the options. And you only have that for those people that need it when they're in need. And you're basically only marketing it to your agents saying, hey, we do have this tool if somebody needs it. We have something like that on our team. I don't even want to share with you what it is. But we have a strategy on our team that we use for a very limited number of people, only when it's appropriate, and we don't advertise it publicly. But when we need it, we use it. Olivier said, this conversation is a weekly topic. Live and let live. I wish, but that's not going to happen, Olivier. P.S. I want a pink shirt with Ray's face on it. I'm wearing one of the old Bearded Men of Real Estate shirts today. The Listen, Learn, and Love, which is our kind of tongue-in-cheek take on Live, Laugh, Love. It was the black on black shirt. Pretty amazing. There is a pink shirt that we thought about getting printed that I might have to do. I do like the pink. All right. Let's talk about Opendoor. This headline didn't make sense to me when I actually looked up the Opendoor stock. It says Opendoor tanks after earnings as CEO thanks new investors for increased visibility. So if you haven't been following this, Opendoor went up, and up recently. Their stock kind of skyrocketed. And people are like, why is Opendoor stock going up? And the CEO, Claire Wheeler, thanked investors for their enthusiasm on Tuesday's call. So the first thing you do whenever you see a stock go up like crazy is you want to go to Reddit. Because y'all remember what happened on Reddit. I believe it wasn't Blockbuster Video. What was it? I can't remember which one it was now, but there were some Reddit investing threads that were basically making stocks run up and run down on purpose. And they were investing and divesting according to the thread. They would all do it at once. And I didn't find any evidence of a huge movement on Reddit or anything. The only thing I found was what it said in this article. There was, prior to its recent surge, Opendoor stock had been mostly abandoned, falling as low as 51 cents in late June. The situation was so dire that the company was considering a reverse split that could lift the price of each share by as much as 50. That's pretty 50 times. That's pretty bad. I don't think I've ever seen a reverse split on a stock that I was closely watching. But on June 6th, let's see, what was it? Eric Jackson, that's what it was. So the stock inched its way up over 5 weeks, and Eric Jackson started cheerleading. Jackson is a hedge fund manager who was bullish on Opendoor years earlier when the company appeared thriving, when it was worth roughly $20 billion. EMJ Capital has taken a position in Money Sign Open, and we believe it could be a 100 bagger over the next few years, Jackson wrote. He added later to the thread that the stock could get to $82. That was his release over, what date was this? That's posted July 18th, but it was over on July 6th when it started, or June 6th when it started to really run down. So this hedge fund guy comes out and says this: Opendoor's shares soared 189%. That was their best week performance in the company's public market debut since 2020. The stock closed at $2.25. So then they have the earnings call, and the CEO thanks everyone for their sudden enthusiasm, or thanks for their enthusiasm, not sudden enthusiasm. This tells the history. I'm looking for the current. The housing market has further deteriorated over the course of the last quarter. Persistently high mortgage rates continue to suppress buyer demand, leading to lower clearance and record new listings. So when I looked at this article, I went back and looked at the stock, and let me refresh so I can see this plot. I went back and looked at the stock, and I really didn't see what they were talking about from this gigantic tank. And so I'm going to share this with you guys. How can I zoom in for I want to show you what I saw yesterday. It's kind of hard to just show yesterday because it's showing all, here it goes. Here it goes. All right. This is what I was looking at. So I was looking at this plot and thinking, like, what? That doesn't really look terrible. It's just a slight deteriorate, and then it goes back up. By the time this article was written, it had gone way back up. So the real tank was right here. It's right after the earnings call. But when you look at it over a 5-year, it's going to take a second to load. Oh, sorry. Wow, that's annoying. That number calls me 3 times. I don't know if y'all can hear that, but that number calls me 3 times every Wednesday. It's stupid. Oh, it's not available now. Why isn't it showing it? I just thought it was interesting because by the time I had looked at it yesterday afternoon, it was back up and then it went right back down again. It was back up to here, and then it tanked again today. So it's not doing well. Let me see if I can go to 5-year. There's the 5-year. Look at this. So this is what they were talking about with this run up and run down, which is why I wanted to show the whole chart. It ran up just very temporarily and then right back down. So they're talking about the stock soaring and the stock tanking, but the stock tanked in 2022. That's when the stock, that's when the stock tanked. Right now, it's just doing these small ups and downs, but it looks big because the numbers are so small. So when you go from 50 cents to $1, that's 100% increase. But in reality, what we're looking at here, that's not a tank. That's a blip on the radar of the 5-year chart. But if you're day trading, this is significant. So this is why I'm bringing this up. Opendoor is trying to re-enter the market. In the current quarter, Opendoor is projected just $800 million to $875 million in revenue, which would represent a decline of at least 36%. Opendoor said it expects to acquire just 1,200 homes in the third quarter. That's down from 1,757 and down from 3,504 in the third quarter of 2024. The housing market has further deteriorated over the course of that last quarter. Oh, I've already read that part. So what they're trying to gear up to re-enter the market, but they're not getting any support from people buying stock. So I'm not sure exactly how they're going to do it. They're still pitching They're still saying they're going to do it, but I'm not seeing an Opendoor for them back into the market. But they're claiming a turnaround. The turnaround isn't showing much evidence yet of working. For the second quarter, Opendoor revenue increased of about 4%. Its net loss narrowed to $29 million. So its revenue increased to $1.57 billion, and it lost $29 million. That's wild. How much would somebody pay for Opendoor? Like how much would you pay to lose $29 million? That's crazy. It's hard for me to fathom how all that works. All right. There's my 2 cents on 50 cents.
I don't get this whole Opendoor thing because look, I got a property around the corner from my house that Opendoor bought after it was renovated, and it's been sitting with an Opendoor sign for the last, I would say, 16 months now. Like nobody's buying. It's ridiculous that they're still sitting on this house, and it hasn't gotten sold yet. I don't know how they make money when they do this.
Yeah. And they're not even in my market. I know there's a lot of markets they're not. Christina, are they in your market? I doubt they'd be in Louisiana. Christina said GameStop. Yes, GameStop. That was the one that had the huge run up because of Reddit. I think there were a couple of others too, but that was the main one. They got all the attention. And I'm trying. Yeah. Anyway. All right. I agree with you, Scap. We've had story after story of people that have had that experience. So Christina said, nope, it's not in her market either. What's up, Rick? Rick Gonzalez, Castle Rock, Colorado. He said, our team just piloted a program where we won the opportunity to be the designated team for Opendoor in Denver market. Really? Okay. I need to know how this works, Rick. Do you think, well, you probably can't say it now because, you've signed a document to work with them on something. So I doubt you could be negative Nelly on it. But what I guess let's see. Let me give you a question you can hit. What are you most excited about in working with Opendoor? Is it the where they get the lead, right? Because someone's like, oh, I'll just sell it to Opendoor, and then that's pitched, and maybe it doesn't work, and then they go to you, Rick, and then you take it from there and actually list their property. Is that how it happens, or do you list it with Opendoor? Christina M. Smallhorn said, I got a call asking me to jump on a Zoom call to offer my clients an offer for their home. Oh, just right now? Or are you saying for Opendoor? I got a call asking me to jump on a Zoom call to offer my clients an offer for their home. Like from Opendoor, where you get on a Zoom call and then they tell you, oh, of course, I said, just write the offer and we'll be sitting on an hour-long Zoom call. I see what you're saying now. That's crazy. So instead of somebody sending you an offer, that's why it was blowing my mind, because I was like, why would somebody do a Zoom call for an offer? Instead of somebody just sending you an offer, they wanted to get on a Zoom call for it. That's nuts. We keep having this recurring email that comes out, and somebody like, hey, for this property, here's what we're going to offer, and here's the terms, and here's the part seller financing. If you don't take that, here's another option. And I've just started replying to those as unsubscribe. Oh, Christina said to pitch you and the sellers. WTF. Yeah, that's not going to work. That's not going to work. Rick Gonzalez said, we get to pitch listing the house along with the Opendoor offer, valid for 30 days. I got it. So you're like, do you want to list it or do you want to do the Opendoor thing? And they get to choose. So I think that's the only salvation for Opendoor is lead generation. There have been a lot of complaints on this show from people that have used Opendoor to sell, or somebody like Scap said, down the road from them. And because of that, they had a really terrible experience and everybody in the neighborhood knows about it now. So I think the best way forward for them is a lead generation referral resource. Exactly, Rick said. Alrighty. Let's go to the next article. Income is steady, even as the market slows. The just released 2025 member profile from NAR includes some income and expense trends, niche specializations, outreach strategies, and the value of experience. So this is an overview article that you guys can find on nar.realtor/magazine. Remember, they don't do the print version anymore. So this is part of that. They have the full member profile that you can look at with additional data. But here's a broad overview. The real estate market will always have a consistent flow of new entrepreneurs, said NAR Deputy Chief Economist Jessica Laus. At the time, existing practitioners are expanding their business specialties or remaining focused on helping their clients overcome their biggest stressors, housing affordability. It said the top home buying barriers in order, according to realtors, are housing affordability, 25%, expectation that the mortgage rates might come down, 19%. Oh, so the biggest barrier to people buying a home is that they're not buying a home because they're waiting on rates to go down, or they think rates are going to go down. Lack of inventory, 70%. Difficulty in finding the right property, 10%. No factors limiting potential clients, only 7% of people said that. Expectation of prices falling. Consumer confidence, 4%. Difficulty obtaining a mortgage, ability to save for down payment, and ability to sell existing home. What I'm surprised is not on there as a factor, and maybe this is kind of couched in with the expectation the mortgage rates might come down, is having a 2% interest rate in their current home. They're like, no, I'm literally getting paid every day that I don't pay off this loan and live in this house. Incomes rise, sides hold steady. So all realtors in residential sides, 5% had 0 transactions, 27% had 1 to 5 transactions, 6 to 10% had 23 transactions. No, wait. So I'm sorry. 23% had 6 to 10 transactions, 17% had 11 to 15, 9% had 16 to 20, 15% of agents had 21 to 50 transactions, and only 4% of agents had over 51 or more. I wish they kept going. The median transactions number is 10. I wish they kept going because I'm curious, like, how many people have 100? Is that the top 1% or top 2%? Where is that? Then you have experience paying off, basically saying the longer you've been in the business, the better you're doing and the more you're making. Budgeting smartly in the time of inflation. Yeah, y'all should check that one out too. Anyway, click on the report. You could download the highlights PDF, and you could download and take a look at the full report. And then they have additional information. So business activity, talks about the brokerage, number of transactions, all that jazz. So take a look at the report. Know what's happening. Why is CNBC requiring that I log in now? It's kind of annoying. All right, let me log in. I can't show you my password.
So it says that the source is NAR 2025 member profile.
Yeah, you know when they send that email around and say, hey, please answer all these questions?
Yeah.
Yeah. It's the people that took the time to answer those questions.
We've had these conversations of surveying, 10 people that walked by your office.
Yeah. 100%. I'm with you on that.
Yeah. What is it? 60% of the time it's 100% correct.
Well, I heard that 78% of stats are made up on the spot. So,
yeah.
Olivier said 50 by themselves or with an admin, a showing agent. I hate these gross numbers that say they're in no way a sign of viable business or not. Yeah, it is. It's difficult to tell. I mean, the models say that once you have 30 to 40 transactions, you should get an assistant. So I would assume at 50, they have an assistant. You also have to think that the team leader is going to say, well, here's what we did as a team. And the team member is going to say, well, I don't have any under my name whenever they look in the MLS. So that's also another point. All right. Housing to remain the weakest part of the economy, falling 8% in the second half. The housing market will hamper the economic growth in the second half of the year, according to Goldman Sachs. Residential investment should fall 8% in the back half of the year compared with the same period a year ago. Residential investment is likely to remain the largest drag on growth. A slowdown on immigration is likely to limit household formation in the midst of the President Donald Trump's crackdown on illegal border crossing following his return to the White House. Hiatus is also cited in rising popularity of mortgage buydowns when the homebuyers purchase mortgage points to lower the rates as evidence of affordability issues. Moreover, the slowdown in the labor market will further hurt housing trends, it thinks. Friday's non-farm payroll report indicated such less hiring activity, with July data coming in below expectations and May and June totals revised sharply. Oh, I do want to say the Bureau of Labor Statistics guy was fired and everyone was up in arms about Trump firing the guy. You do know that like something like 48 of the last 50 reports had to be massively revised. And that was during Biden's presidency. So Trump is like, dude, if you're not even close to get the numbers right. They used to get them pretty close where they would revise them a couple here and there. They're not getting close. So I fully support the firing of that guy. It was a big contention for years as we were reporting on the Bureau of Labor Statistics data. We would have to say, well, let's just wait to the revision. So I'm glad the guy was like, go, and hopefully they can find models and ways to be more accurate in their numbers and projections because it was insane.
Hey, Ray. So on that, I can't remember. I saw a video clip of some hedge fund guy, CEO guy talking about this with these numbers. And he said basically that it's a survey, right, that they send out to, I guess, HR departments at companies. And they have maybe 50%. They used to get above 60% pretty consistently. Now they're barely getting 50% involvement. And that's part of the reason why. So, but send out like the survey as an old school thing instead of it being some kind of like automated system that they could just go in and plug in the numbers, right? It's antiquated. Of course, it's antiquated. They haven't updated any of these systems. So the way they're tracking these surveys, which it's a survey, it could be off, right? It's not going to be 100% accurate. They're not even getting a lot of involvement with it. So the numbers are off. So when they get the real numbers later, when everything is fully reported, it's completely off. So yeah, they've spent the last 4 or 5 years getting really bad information, pumping that bad information. And then later on trying to, just sweep it under the rug that, hey, we adjusted this when we finally got the numbers, instead of just going off of those numbers. Hey, these are the initial numbers, but we'll have better information in 30, 60, 90 days, whatever it may be.
And it was when the numbers and stuff hit, I mean, it was some very obvious political jockeying. I think one of the numbers that was revised during Biden's term was like a 800,000 number. And that's gigantic. But there seemed to be where there's data that's off that far, there's room for politics. And I think we're just trying to get rid of that now. So we
need to get politics out of these. It's numbers,
right? So just do the numbers. Now, and some people may be saying, well, he's getting less participation, so it's not really his fault. It is. That's literally his job, is to get the maximum amount of participation and try to get accurate data. And if he's not doing that, then he needs another job.
The other part of that too was a large majority of those jobs. The reason they had good numbers on the jobs later on is because the jobs were government jobs. So the government was providing most of the job increases, but when they went back and looked at everything and double checked, it was really only the government hiring, and other private companies were not necessarily hiring as much as initially thought.
All right, let's take a look at mortgage rates. Mortgage rates dropped to the lowest level in 10 months. What? So, I mean, that means that the market should take off, right? The daily average mortgage rate dropped to 6.57% August 4th, the lowest level in 10 months, which means a home buyer on a $3,000 monthly budget has gained roughly $20,000 in purchasing power since May. Wow. I mean, let's go, guys. Let's jump in. Mortgage rates fell over the weekend following the weaker than expected July jobs report. The U.S. added fewer jobs than anticipated, and the unemployment rate ticked up, which pushed the chances of the Fed cutting the interest rates in September. The dip in mortgage rates gives house hunters a window of opportunity to buy before summer ends, said Daryl Fairweather, Redfin's chief economist. Rick said a whole 20K. It could be significant if you have somebody looking at the very top of their mark, and they're trying to get some like closing cost or something paid for, and the seller's like, I'm not going to sell it for that low. You got to come up here to this price and we'll pay it. Well, that may get it.
It's only helpful if they're already under contract today.
Yeah.
Because tomorrow they're going to change again.
Well, they got to get locked in. Lock it in. Let's go find a house. Home buying affordability is improving in these 11 places. Where are these places? The income needed to afford the typical U.S. home has fallen year over year in almost a dozen major metros, of which are Sunbelt boomtowns that have dropped in home prices amid surging inventory. So we have the U.S. metro area. Home buying affordability is improving these 11 places. Oakland, California. Income required to afford a median price home is $244,000. That's down 4.6%. That's the largest jump downward. I'm not going to read all the numbers. I just want to read all the places. Dallas, Texas was number 11. So you have Oakland at 1, Dallas, Texas at 11. In Dallas, the income required is $120,000, and it's down 0.2%. So that's the range. And now here are the cities: Oakland, California, West Palm Beach, Florida, Jacksonville, Florida, San Diego, California, Tampa, Florida, Atlanta, Georgia, Phoenix, Arizona, St. Louis, Missouri, Orlando, Florida, Sacramento, California, and Dallas, Texas. A lot of California numbers there. U.S. income required to keep home payments affordable. It just keeps going up from 2012, of course.
West Palm Beach seems like an odd one on the list.
I guess it does. West Palm Beach is $128,950. It's down 3.7% from the previous year-over-year change in income required. Now, the cheapest one on the list was St. Louis, Missouri at $75,000. Then you have Tampa, Florida at $97,000, Jacksonville, Florida at $94,000. There's cheap houses.
Condos
Yeah, it
in
could
West Palm
be.
Beach.
Could be. I do think it's interesting. Like they said, the nationwide, the typical home buyer needs $112,000. That's roughly $25,000 more than the typical household makes. It did say most of which are Sunbelt boomtowns that have seen a drop in home prices amid surging inventory. But I only see but one Sunbelt in Sunbelt, kind of the South. I guess Florida would be Sunbelt, wouldn't it? But California is not the Sunbelt, is it? California is not Sunbelt. I'm thinking of conference. Maybe I shouldn't think of conference. Is
Florida, Texas, California, Arizona, and Georgia. South Carolina, Alabama. It's like that lower third of the country.
I got it. Okay. The Sunbelt region. All right. Arkansas is in the Sunbelt.
New Mexico, Alabama, Louisiana, Nevada.
I didn't realize it went so far to the west. Here's the
Sunbelt. It's not the Bible Belt. It's the Sun Belt. The sun goes all the way across, so it's like the lower third of the U.S. where the sun's out. Higher temperatures.
Yeah, that makes sense. Fine. Okay.
You're insane.
Home prices drop in 14 major metros. including parts of Florida and Texas. So we have a couple of articles kind of like this. This is daily average 30-year fixed mortgage rates. Let's see. Those are the leading indicators. Let's go to the price drop stuff. Here it is. U.S. highlights 4 weeks ending July 27th. So the median sell price is $398,000. The median asking price is $402,000. Median monthly mortgage payment, $2,671. Let's see, pending and active. Metro level highlights. Metros with the biggest year-over-year increases in the median sell price: Cleveland, Montgomery County, Nassau County, Detroit, Indianapolis. Metros with the biggest year-over-year decreases: Oakland, California, West Palm Beach, Jacksonville, Austin, and Houston. There you go. The most new listings: Tampa, Florida, Portland, Oregon, Jacksonville, Sacramento, and Orlando. Actually, that's the biggest year-over-year decreases in new listings. Sorry. The biggest year-over-year increases in new listings are Seattle, Philadelphia, Montgomery County, Cleveland, and Minneapolis. So in all these numbers, Milwaukee is holding up better than other major U.S. housing markets. I thought this was an interesting data point. Milwaukee is holding up better than any other U.S. housing market, with home sales up 12% year over year and 8.2%. And the typical buyer is fetching more than their list price. Typical seller is fetching more than their list price. Why? What's going on in Milwaukee? If you're from Milwaukee, jump in the comments and let me know what's going on. Milwaukee homes are attracting bidding wars and selling for above asking price. It's still red hot. Milwaukee's inventory shortage has been driven by a variety of factors. Many homeowners are hesitant to put their houses on the market because they don't want to lose ultra low mortgage. I mean, this is the same stuff for everyone, right? The Midwest and Northeast have been building fewer homes in the South and West. When does the snow go away up there? maybe they're just now getting started on the new builds.
We still only have 2 months of inventory, Ray.
Wow.
So we're still seeing bidding wars.
Tell everybody where you are. What city are you?
Well, I'm in eastern Pennsylvania, about an hour and a half outside of Philly.
Okay.
But we're still seeing bidding wars in our area. Lots of people at open houses. I had 60 at my last open house and had 5 offers, all of them over asking, all of them with escalation clauses. It's still a game here.
Is that every price range, Terry?
No, well, this one was 500. The lower price ranges definitely. The higher price ranges are sitting longer, the million plus. But still, we just don't have inventory.
Interesting.
Nobody wants to give up that rate.
Yep.
Or they just don't want to move. Period. They're never going to move. They're going to die in that house. So that's a trend here too.
If they would have served me the survey, that's what I would have said. That a lot of people just want to hang on to their super low rate. Christina Smallhorn said Orlando. Oh wait, let me go back to Rick Gonzalez first. He said a lot of out-of-state owners dumping properties back in my old Florida market. Now D.R. Horton is offering an 8% BAC to try to sell their standing inventory. Whoa. Christina Smallhorn said Orlando during 06 and 08 was bloodbath. Let's hope this is not a repeat. I mean, if it is, though, the YouTube views go through the roof when we talk about the housing crashes, Christina. I don't think this is going to be a repeat. I think home prices are actually still going to go up, or home values are going to go up. I think you're going to see immediate prices go down, though. I think everyone that moved 2 and 3 years ago is going to have a hard time dumping their property, but people that have been in their home 5, 6, 7 years, they're going to have a fun time selling their home because I think they're still going to make quite a bit. All right, let's talk about this. This is an interesting market. Is anyone here a Kansas real estate agent? Realtor.com did a report about the dying Kansas ghost towns where you can find a home for less than the price of a Tesla. Then they show Elon standing by a Cybertruck. Well, Cybertrucks you could buy a lot in the Little Rock market for less than the cost of a Cybertruck. Or you could buy not just a lot, meaning a plot of land. I'm saying a lot of homes. So it talks about while moving to a remote rural area might not be the traditional American dream, it could be the perfect way to take the first step onto the property ladder while also helping bring new life into the country's dying ghost towns. Homeownership is a dream. Let's see. There it is. As of July, the national median price hit $439,000. While a Cybertruck can set you back at least almost $100K. And the most basic model, according to Tesla's website, in rural Kansas, home can be bought for less than half that amount. Yeah. I mean, yeah, Little Rock too, man, but that's in the city. Like you could buy a home for $80,000 and be near a Starbucks here if you wanted. So, but it shows pictures of these like ghost/farm towns. And it says populations are dwindling at such a rate that they may not warrant the label town anymore. In a string of places like Coldwater, Kansas, Protection, Kansas, Ashland, Kansas, and Inglewood, Kansas, the number of residents has halved since 1930s, according to the U.S. Census data. And these are just a small example, a drop in the pool of the middle country towns in the same predicament.
Maybe we need to get Aaron Brockovich out there to see if there's stuff going on in the water.
Yeah, I remember that. You just get Julia Roberts out there. She'll increase the population. In Kansas, the duo who posted the account Joe and Nick's Road Trip stumbled across multiple ghost towns where once thriving industries crumbled, causing mass exodus of residents who had fled and searched for more financially stable communities. And this is in part why I don't mind some of the tariffs, because it should bring some industry back to the U.S. and back to places like this. But farms are hit in a different way in the U.S. All the taxes and stuff from farms and the death taxes if you leave your farm to someone else. And the cost of farming is incredible. So Christina Smallhorn said West Texas has a lot of those towns. Yeah. Rick says great for preppers who want to establish their own private towns and homesteads. Yeah. I mean, it would be neat if they kind of embraced this and like called themselves the homestead state or something, and just really got a lot of people that wanted to kind of pour in, because that's a pretty nice size house, and you see the garden and the little greenhouse, and this is a great little plot of land. But how far are you away from a retailer? Well, I guess it doesn't matter these days for Amazon.
Just a click away, right?
Yeah, just a click away. You might have to wait an extra 3 days to get it. But yeah, with all the advent of everything online, you don't even have to go to the store. You can just have them deliver all your groceries too, the groceries that you need because you're not eating those. But then you got to figure out your job. And do they have fiber? Everyone wants fiber now. When they're looking for small plots of land in places like this in Arkansas, they're like, I want to be 30 minutes outside of town, super rural. I don't want people to be able to like just drive up to my house or drive by my house. I want to be out on the land a little ways. And oh yeah, I want running city water, fiber internet. Like, whoa, wait a minute. That's a big ask. Yeah, Christina said, where do you get groceries? You can click and deliver some of them. So my parents live way outside of town, and they live way outside of a small town. And so they go to the grocery store maybe once every 2 weeks or something like that. They'll go to town and do what they need to do and then go back to their home. Rick Gonzalez said, OnlyFans. Yeah. You got to have that fiber. Got to get that fiber internet.
Starlink.
That's what Christina said. Get Starlink. What's the speed on Starlink? I don't know. I'm ignorant. I don't have Starlink.
They're waging wars based off of it in other parts of the world.
That's true.
50
to 250 megabytes per second for downloads, and 5 to 20 megabytes per second for uploads. That's not terrible. Isn't that a tenth of fiber?
The gig, yeah. I mean, you're looking. Well, hey, it's better than DSL. If you remember old DSL.
Yeah,
So
I remember dial-up. The 50 to 250 megabytes per second is actually that 250, I think, hits most Wi-Fi internet speed limits. Like most of your computers, like you could be on a fiber network, but your computer can only process 250 megabytes per second through its Wi-Fi. So,
well, that's the limitation of fiber in the first place. I'll bring over my old telecommunications
I
stuff.
thought it was a gig.
Fiber is unlimited. It's only limited by the equipment that it's attached to.
Yes. I see what you're saying. Christina said, only if I had a whole house generator would I even consider this. So you are considering it? Because there are whole home generators and you could surely do that.
Yeah, but what's the fuel source? And how do you get that out in,
True.
way away Kentucky?
I
The
mean,
solar windmill in your backyard.
yeah, you do a whole wind farm and solar panels, and but you can't do that through one of those services where you get the loan because you're not even breaking even on it. But at least you have energy out there. Local Kansas real estate agents are also pitching low-cost homes as investment opportunities for recreation activities and farm production struggles. The area doesn't get a lot of rain, so crop production and its yields aren't as high as places like Iowa, Illinois. It makes pretty hard to make a living farming. Propane. Yeah, somebody said propane and you fill it yearly with maintenance agreement. Yeah. You get one of those big 900, what is it, gallon propane tanks or something like that? Not getting rain is kind of a killer for a lot of farms. That's rough. You'd have to find water. That's going to be important if you want a homestead.
And it's a slow news day on This Week in Real Estate.
Do you think this is slow news?
I don't know, is it?
Well, we have AI home building. How about that? It's still in its infancy, but it's gaining ground. These are builders that are using AI, and it says what they're using it for to generate advertising and marketing materials, 20%. To help analyze markets and planning projects, 11%. Design projects, 3%. Monitor construction progress, 3%. Help manage production schedules, 3%. It's all like they're all just kind of using it for random things, except most of them are using it for advertising and marketing. To obtain permits, 1%. I thought that was interesting. Maybe it's helping them craft a letter to the city or something. Christina said, I can't do rural anymore. I want cold and city. We're moving to Pennsylvania. Oh, really? I didn't know that. That's cool. Actually, I think I did know that. I think I did know that, Christina.
Where are you coming to, Christina?
All right. For the last news article, I wanted to share this. Christina's going to love it because I know how she loves Fox News. But Senator Adam Schiff under federal criminal investigation for alleged mortgage fraud violations. So here's the long and short of it, and the reason why I'm sharing it, because I don't normally do like political pieces like this, but it's directly related to housing. And I had a client ask me, hey, we want to buy this second home. Can I just say I'm going to live there? And I was like, no. And like, well, if I say I'm going to live there, I get a better rate. And I said, no, you got to tell them it's your second home, or you got to pick one to live in and make the other one your second home. Well, that's exactly what Schiff did. He said he bought another house and he said he was going to live there as his primary residence. So he has two primary residents, and he basically got a better deal on his loan because of it. So that is mortgage fraud. We'll see what happens. I'm so used to nothing happening with all of this stuff, where politicians can do whatever they want, never get in trouble, it seems. So I don't really expect anything to happen. I hope something happens. But this is also the same thing that happened to Letitia James. So she was the DA who went after Trump, and she basically did the same thing. Said she bought a home with her husband, who is actually her father, said she was going to live in there, and she put a bunch of family in there. So she got a cheap mortgage rate by saying it was a primary residence, and it wasn't. So we'll see what happens, but I did want to share it because it was apropos this week, because one of my clients was like, can I do this? I'm like, that's been in the news a lot lately. We should talk about it. No, don't do that. That is mortgage fraud and you will be in trouble. Well, that's all we got for this week. It was a little bit of a slow news day, but hopefully you guys had fun. Thanks for dropping by. And if you have any questions, hit me up on Instagram. My Instagram is Ray Zorback. That's RayZorback. Christina Smallhorn says, politicians lie? No way. In other news, fish are in the ocean. Breaking news. Christina said investors lie to get the house from HUD. Yeah, I've seen those one bid forms where it says it's going to be used as your primary home. And they're like, yeah. And it's this big investment group. It's like, nah. No, you're not. All right, well, don't lie in your documents, guys. It's mortgage fraud. Clint Peters Realtor said propane and delivered. Dust Bowl 2.0 incoming. Alex Bratchfield. Sorry, guys. Sometimes the Instagram comments are late to update, so I apologize. But thanks everybody for coming. I'll see y'all next week, and then Tom Ferry Summit is coming. If you're going to Tom Ferry Summit, hit me up. I'd love to meet you guys in person. All right, bye everybody.